In our recent monthly group coaching live sessions, a lot of you HEMA Ready Tribe members have been asking, I see how you do multi-time frame analysis, HEMA. How do I get myself in the habit of doing that? How do I make it something that I naturally go and do? So I'm going to give you one tip, just one, that you can use to bring that into your trading. And it's this, ready? So whether you're a day trader or a swing trader, you probably open up a set of charts, study them, and then close them either after you put your trades or complete your analysis and move forward, right? Before you close down your charts, the next time you do it, go 2 time frames higher. So that can go from an intraday to a daily, weekly. That can go from daily to weekly or monthly, okay? So go 2 time frames higher, and the exact factor, the exact multiple is not the important thing. Just open up a chart that's 2 time frames higher and have your system close out on that chart. I'm telling you, this is very, very powerful. And once you do this and start to make a habit of it, it will be part of your routine to look at that higher time frame chart first before you get down to your trading time frame, okay? So the way I have it set up on my charts is I have the weekly chart of the E-mini S&P 500 futures as the first chart I look at. Now, I've been doing this for so long that even if I'm in a rush and I don't flip back to my chart, when I open, I quickly jump to that weekly chart and bring it down. But for those of you who are trying to set this as a habit, I highly recommend that you do this. And this will help you get into the habit of looking at the higher time frames. Now, what are the benefits of actually trading higher time frames? Or I should say, analyzing them before you get to your trading time frame? Number one, it will help you make sure that you truly have the trend, right? The price direction identified, and that you're not trading against it. Number two, it will allow you to filter out some of the noise in the market. Sometimes even the daily chart, like Mr. Gann said, can be noisy. So when you have a higher time frame, again, 2 time frames out than what you're currently making your decisions on, it helps filter out that noise, okay? And then number 3 is that you will identify the most important price resistance and price support levels by starting the higher time frame. Because think about it this way. If they're important for the entire, say, monthly chart structure, right? They're absolutely going to be important on the weekly chart and then down to the daily. And again, I demonstrate this for you over and over in Monthly Group Coaching live on the charts, one after the other, so you can kind of nail this down. But I'm telling you this so that you can bring this into your trading and make it a habit, right? So really focused piece of information and advice here. If you want to get in the habit of multi-time frame analysis before you get to your trading time frame, close your charts out on that higher time frame so that you don't have to do the work of thinking about it the next time you open the charts. And you can just rewind back on this video if you want the 3 reasons why you should even bother to include multi-time frame analysis in your charts. Catch you next time.